The US dollar selling has continued on the eve of the FOMC rate decision. Hello traders, this is Fawad Vasquez, other market analyst for City Index, and today we're looking at the dollar against the euro here. The euro dollar has broken to a new 2025 high, breaking July's peak of 118.30, despite the fact that we had a stronger than expected retail sales report from the US. As I mentioned in my report published earlier, with the link provided in this video, the retail sales report didn't change anything at all because the market is fully pricing in a rate cut tomorrow at the FOMC meeting. As a result, we've seen continued weakness in the dollar, pushing the euro dollar above the July high. Where does it go from here? Well, I think if it can hold around current levels, and if the Fed is indeed dovish, signaling 2 more rate cuts to come before the year is out, that could potentially push the euro dollar to 120 psychologically important level from here. Meanwhile, the ECB is basically done with rate cuts, which means that the interest rate differential between the two economic regions should shrink further in the favor of the euro, provided, of course, the economic data doesn't deteriorate significantly in the Eurozone or improve significantly in the US from here on. In terms of support level to watch on the euro dollar, the 117.80 level, which was previously resistance, is now going to be the first level of support to watch. Below that, 117 is the line in the sand for me now. So clearly the trend for the euro dollar is positive heading into the FOMC meeting tomorrow. Now the US dollar has been selling off across the board, be it against the euro, the pound, the franc, you name it. But it has held its own relatively well against the Japanese yen, well, until today. Today the dollar yen is down 0.5% after breaking below 147 support level. Can it close below that level now? Because, recently it has been testing this level on a number of occasions, and each time it bounced from there, there was not any follow through to the upside, with resistance coming in at around the 200-day moving average of 149. And then once that level held, we've seen resistance come in at around 148 area. But now it is trying to head lower because of the lack of upside momentum and the recent weakness for the dollar against the other major currencies. So for that reason, we've seen the dollar yen finally come down a little bit. And this could be the start of a new bearish trend for the dollar yen. So watch out for a potentially large breakdown heading deeper into the week, especially if the Fed is deemed to be a little bit on the dovish side of things. So where do we go from here? Well, with 147 broken, if we can hold below that, I think this could potentially pave the way for 146 initially, which is the trend line basically. Below that, there's not much important support level seen until the 145 psychologically important level. Below that, we could be talking about the low 140s, but we'll cross that bridge if and when we get there. For now, the key level to watch is around the 146, which ties in with the trend line. In terms of resistance levels, then 147 is going to be important insofar as the short term is concerned. Above that, 146. But in the longer term outlook, I wouldn't get bullish on the dollar yen unless we clear the 200-day moving average, which is now pointing lower. So unless we go above the 200-day moving average, any short-term strength we see should be taken with a pinch of salt, given that the trend on the dollar against the other currencies is currently bearish. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.